Right. Assalamualaikum warahmatullahi wabarakatuh, and good day to all. Right. So this is the what I try to record in the video. I hope you guys can accept this because I'm not expertise in making a video recording, but I try my best to make sure you guys understand what I'm trying to deliver to you. First of all, I would like to sorry because I don't know how to move me from that circle to another place. I don't know. So we just stick to this. Okay. All right. So this video, I would like to explain to you the December 2022. This is actually test from Puncak Alam. Okay, this is test from Puncak Alam. December 2022. I think I did explain a bit last week class, but we just proceed to this, right? So we just go through the question first, all right? So this question regarding the Sejahtera is one of the premier engineering service solution provider. It offer value-added digital engineering service to various clients that cut across various industries, include automotive, high-tech industry, rail, electronic, energy, defense, precise equipment, and tooling design, all right? So the next part is the question asked you here, not the question asked, the question mentioned to you here is this. You see, on 1st January 2020, Sejahtera Berhad signed a contract arrangement with Bahagia Berhad to leasing equipment from Bahagia Berhad. Right. So now we know that Sejahtera Berhad is a lessee while Bahagia Berhad is a lessor. Right. So the term and condition are as follow. Right. So first thing first, I would like to highlight the term of the non-cancelable lease is 4 years. Okay, so we know it is 4 years. All right. So the lease, sorry, the video. Okay, the lease period is 4 years. Annual rental is 978,446. So we know it is 4 years, and every year, the lessee need to pay the lessor RM 978,446 are due on 1st January each year. Okay, so this sentence is very, very important. You see, there is information, the lease period is 4 years, the amount of rental is 978,446, and it is on 1st January each year. What does it mean? Mean that it is in the beginning of the year, right? In the beginning of the year, right? So the fair value of the equipment on 1st January is 3.5 million. The equipment has economic life of 15 years, you see, the question give us 15 years economic useful life. I mean that useful life is 15 years. But the company or the lessee just lease for 4 years only. Right? What is the impact? The impact is on our depreciation. So depreciation, we are going to choose which one? The lower of. So the lower of is 4 years. All right. So the question gives you the fair value, which is 3.5 million. The equipment has a economic life of 15 years. All right. Never mind. Sejahtera pay all the executory costs. Okay, so Sejahtera incremental borrowing rate is 10%. However, the lessee aware that the lessor use 8%. So we want to follow which one, 10% or 8%. All right. In this case, we are going to follow 8% because the asset come from the lessor. So we need to base on what lessor give to us. All right. So in this case, okay, you see, the fair value of the equipment is 3.5 million, 15 years. So we are going to choose which one? Okay, we are going to choose 4 years as our depreciation. So what we are going to do with these 15 years? We are going to do nothing. So you can just cancel this line. So no salvage value. All right. Okay. So next we are going to choose 8% because it is what it comes from the supplier, all right, or from the lessor. Okay, so now we proceed. Okay, so 10% we are not going to use at all. 10% we are not going to use at all. Right, guys, what is 8%? 3.57710. This one is actually a PVIFA. Okay, PVIFA. All right, so the question give us this. So we just follow this for 4 period payment. The question mentioned 4 period payment, right? So we just follow for 4 period payment. Even though we know it is in the beginning, all right, but the question gives us the PVIFA for annuity due. Annuity due mean that including the payment made in the beginning, which is actually no effect at all, but it is including in this calculation, right? So in other words, if you like to refer to PVIF table, PVIFA table, you can refer to PVIFA 8%, 3 years, plus with 1. Why plus with 1? Because the first one is no effect. So the 3 years only affected, right? So at 8 PVIFA, 8%, 3 years, you get the answer. It is 2.5771 plus with 1. Why plus with 1? Because 1 have no effect with PV, present value no effect. But never mind. It's okay. I just proceed. Next, determine the amount of ROU. You see the mark is only one. Definitely, it is only it is very very easy for us to get, right? In other words, actually, what is ROU? ROU is right of use asset. So how to get the ROU, right? So based on this sentence from the question, this one I just extract from the question. The fair value of the equipment on 1st January is 3.5 million. The equipment has a economic life of 15 years, right? So we just take this part only. Right? Fair value of the equipment is 3.5 million. In other words, okay, we can also approve this. Annual rental is 978,446 with the PVIFA 3.57710. Right? In other words, actually, what is ROU? Right of use asset is actually a minimum lease payment plus with any directly attributable cost. In this question, the question did not give us any directly attributable cost. So we just take the minimum lease payment, or this is the calculation lah, which is we just take the present value, the fair value to become 3.5 million, or you can prove this calculation by 978,446 times with 3.57710, and of course you are going to get 3,499,999, something like that. We just round off to become 3.5 million, which is similar. So either way is okay, but you see the mark is only one actually. So therefore, it's enough if you just ROU is equal to 3.5 million. Enough. Or you can prove also 978,446 times with 3.57710 and it becomes 3.5 million. Alright. This one is direct line, so I hope there's no issue. The next question, all right. Prepare the lease payment schedule. Okay, schedule, round up the nearest RM is the table, right? It's the table. Okay. So remember, this table, we just use a lease payment with lease liability only. Okay, remember, if the previous question give you if the previous question if the previous calculation, you calculate ROU different from lease liability, don't take the ROU. ROU is not bound to interest, right? The one that is bound to interest is only your lease liability, right? So therefore, we are going to start with our lease liability, right? So again, we are based on this information. The lease term is 4 years. Annual rental is 978,446. It is a fixed payment every year. Okay. Other than that, it is start on 1st January. It is in the beginning of the year. Right. What else? It is also mentioned that we start on 1st January 2020. Okay, so we are going to begin this one on 1st January 2020. And the question also mentioned, this is what I extract from the question. The question also mentioned in part D, the question asks you to prepare a statement on 31st December 2021. So we know that the beginning of this company accounting period is 1st of January and the end is 31st of December. So we know it is within this 12 months. Right. Every year it start on 1st January and it is end on 31st of December. Okay. So since the beginning is 1st January 2020, so the first year ended will be 31st December 2020. Agree, eh? All right. So the beginning is 1st January 2020. So the first year end will be 31st December 2020. Okay, so it's follow lah for period, right? 2020, 2021, 2022, 2023. All right, 2020, 2021, 2022, 2023. All right. You see, first is opening balance, but you see the difference here. Here, I put payment after the opening balance. Why? Because the payment made in the beginning of the year. Okay, the payment made in the beginning of the year. So this one is notes for you. Minus payment before calculate interest because payment in the beginning. What happened to the question that we do last week? Last week or last question, we did the payment is after calculating the interest, right? Why? Because that one is payment at the end of the year. But now, because the payment is in the beginning of the year, okay, payment is in the beginning of the year, we need to minus the payment first, then we get the outstanding there, then we calculate the interest based on the outstanding amount, right? So again, guys, never mind, we just proceed. Okay, again, in this question, the lease liability is equal to ROU. In this question, equal of ROU, because the question did not give us any directly attributable cost. So we start with 3.5 million. Then the first payment, 978,446. Yeah, the payment is a fixed payment, right, for every year. Okay, never mind. So to get the outstanding opening minus with payment, then we get the outstanding 2,521,554. This figure then we times with 8%. 8% get interest, right? 8% times with 2,521,524 to get the interest amount, which is 201,724. Right. After we get the figure of interest, what should we do? Interest is N. Okay, interest is N. So 2,521,554 add with interest, then we get closing balance, which is 2,723,278. All right. Closing balance for the 2020 will become opening balance for 2021. Agree, right? All right. And the process is repeated again. So opening balance less with payment, we get the figure 1,744,832 times with 8%, get the interest, then plus with interest with the outstanding, you get the closing balance. Closing balance for 2022 will become opening balance for 2023. Closing balance for 2021 will become opening balance for 2022, and the process is repeated again. All right. But the difference between the payment in the beginning and payment at the end is that the last year, I mean the year 4 here, the last payment made, the opening balance will be the similar amounts with the payment, because we cannot have any outstanding, because we don't have any interest. Why we don't have any interest? Because we pay everything in the beginning of the year. So no interest charged during that year, right? Because payment is made in the beginning of the year. So if payment made in the beginning of the year, then everything is settled. So if everything is settled, then no interest can be charged because there is no amount due or there is no interest we need to pay because there's no liability anymore. All right. So which one is balancing figure? The balancing figure will be this figure. The interest for the year 3 is actually the balancing figure to make sure we get this figure set 978,446, which is the payment for the last year. All right, guys. This part, I hope you understand the difference between what we are doing now and what we are doing in the previous question is because the difference of the payment. I mean the difference with the lease payment or installment. Installment can be in the beginning of the year or can be at the end of the year. The previous question that we do, the payment is made at the end of the year. Now, if the payment is made in the beginning of the year, this is how the table look like. Because we need to minus with the payment first, then we calculate the interest. Okay? So for this question, 4 marks. For this table you prepare is 4 marks. Right? So next question, the question asks you, prepare the journal entry for Sejahtera as the following date. So they give you 3 dates here, alright. So remember the question, we start on 1st January 2022, right? So I put this table for reference. I put this table for reference because I cannot draw, right? So I put this table for reference. Right. 1st January 2020 is the first year, right? The first year when you acquire your right of use asset. Sorry, when the lessee acquire the right of use asset. Sejahtera is lessee, right? So we do the journal entry for Sejahtera in the beginning. So how do we do on 1st January 2020? What happened in 1st January 2020? The things that happened here is that the acquiring of right of use asset. So how to do this? Debit right of use asset, credit lease liability, 3.5 million, 3.5 million. Why do we have another journal entry here? We have another journal entry here because the first payment is made on the 1st January 2020. Yes, because the first payment also, or the first installment, is made at the same date. So the first payment is debit lease liability, 978,446, and credit bank or cash, 978,446. Done. Okay. The one that we do last week or last question, the payment at the end, right? No need for us to show this one lah, right? Okay. So this one, because the payment is made in the beginning, right? So on 31st December 2020, what happened? On 31st December 2020, what happened is, of course, the one that I mentioned in the previous question, the easiest one is depreciation. And how to do depreciation? Depreciation is always debit depreciation, credit accumulated depreciation, right? But now, how much? Okay, how much? The ROU is 3.5 million. Remember, we are going to use 4 years, not 15 years, right? So we are going to use 4 years. So 3.5 million divided by 4 years, we get 875,000. So debit depreciation, credit accumulated depreciation, 875,000. All right, yes. How much is the interest for 2020? So we see here in 2020, our interest will be the green color here, 201,724. That is our interest. All right. So therefore, we record debit interest, credit lease liability, 201,724. All right. So remember, interest will increase the liability. So that's why lease liability is on credit side. Interest is expenses and expenses is on debit side. Okay. All right. Green color, eh? All right. So next, the question asks you on what happened in 31st December 2021. Okay. So in 31st December 2021, we are referring to this part, this row. This row. 31st December 2021. So what happened here? Again, depreciation are going to be a similar depreciation. Debit depreciation, credit accumulated depreciation with the similar figure, 875,000. Don't worry, later I will share this slide to you. Okay. And how much is the interest? Now it's second year, right? Or second row. So interest is 139,587. So again, interest is this figure, 139,587. So we put debit interest, credit lease liability, 139,587. Okay? Right. So this is the journal entry. Okay. Next, prepare the abstract statement of financial position on 31st December 2020. Again, I put this table as for reference. The question asks you to do general statement of financial position on this row. So mean that we need to decide for this liability, 1,884,419. How much goes to current liability? How much go to non-current liability? Okay, but first thing first, is non-current asset lah. Non-current asset, the right of use asset, less with depreciation, then we get the carrying amount, right? So it is 3.5 million, less with depreciation for 2 times. Why depreciation for 2 times? Because 31st December 2021 is the second year. Okay, second year. So depreciation is 2 times because we put here is accumulated depreciation, right? So accumulated depreciation, then we get the carrying amount, 1,750,000. All right. Remember, if you don't want to show this calculation also, no problem. Just show the carrying amount figure or net right of use asset figure. But in my suggestion, I will suggest you to show all the working lah. Actually, it is better. All right. So next part is for us to decide the liability. How much is current and how much is non-current? Okay, guys. So here, yeah. So we are going to decide now 1,884,419. How much of this figure is current and how much of this figure is non-current? All right, guys. So from this figure, how much we need to pay for the next year? Okay, remember, in this table, you look at this table. In this table, the payment is made in the beginning without the impact of interest, right? Because the payment is in the beginning. Therefore, next year for 31st December 2021, next year, how much we need to pay that impact our principal or lease liability? The full figure. Okay, remember, the one that we do last question, we need to minus with interest because the payment is at the end. when the payment is at the end, it is affected by the interest, right? It is affected by the interest. That's why we minus with interest. If the payment made in the beginning, the interest is not yet calculated. So the interest is not affected. So for this question, if the payment made in the beginning, current interest will be the full figure. Okay, we are going to do this, 1,804,419. How much go to current liability? How much go to non-current liability? I give you a note here. If the payment is made in the beginning of the year, just take the full payment of next year to become current liability. In other words, how much the full payment of next year? 978,446, right? So this full payment are going to become your lease liability. Full payment. Just take this full payment and put in the current liability here. That. And how much your non-current liability for the lease liability? Then for you to get that, you minus to it the full payment. So 1,884,419 less with 978,446. And you get this figure, 905,973. All right. Again, there is a difference when the payment made in the beginning and in the end. The impact is very, a lot of impact, right? Interest impact, table impact, the statement of financial position also impacted, right? So this is how you get the current liability, the current liability and non-current liability. Again, for the payment made in the beginning, just take the full payment next year without minus with interest, put in current liability. All right. And then to get the non-current liability, minus lah total amount minus with current liability, then we get the non-current liability lah. Okay. But if the payment made in the end, like what we did in the previous question, payment made in the end, the payment minus with interest, then that figure we put in current liability. Right? That is the difference, Okay, so the last question is the theory part question. So this theory part question briefly explain the difference between finance lease and operating lease and support with three situations that individual or combination would normally lead to lease being classified as finance lease. All right. So again, what is this? Okay, finance lease is transfer if it's transferred substantially all the risk and reward incidental to ownership of the underlying asset. If the asset is totally transferred to the lessee, it is finance lease. I explained this right. If the asset is transferred to lessee, basically it is a finance lease. If it is not, then we classify as operating lease. Okay, so from here you see the situation that individual or combination would normally lead to lease being classified as finance lease are there's 4 points here, but not necessary for you to put 4 points. Actually, only 3. I just give you an extra point here. All right. Lease transfer ownership underlying asset to lessee by the end of the lease term. So lessor transfer the asset to lessee at the end of lease term. They give to the lessee the asset. Lessee has option to purchase the underlying asset. The price is expected to be sufficiently lower. Remember the question that we did, all right? If the price is lower, most probably, or economical reason, better for the lessee to purchase, right? So yeah, the lease term is the major part of the economic life of the underlying asset. Asset can be used 5 years. So the lessee lease for 4.5 years, for example, so majority. So it is a finance lease also. At inception date, the present value of the minimum lease payment and the substantial all of the fair value of the underlying asset are similar. The value is similar. The underlying asset of such specialized nature only lessee can use. The asset is very special. Only lessee can use and other company cannot use. All right. So this is another point or another notes for you lah. You can use or you cannot use. It's okay just for your notes. All right. Indicator of such situation that individual or combination will also lead to lease become finance are if the lessee can cancel the lease, lessor lose associated with the cancellation are borne by lessee. Right. So let's see bond everything here because risk and reward transfer to lessee. Gain or loss from the fluctuation in the fair value of the residual accrue to the lessee, and the lessee has ability to continue the lease for the secondary period at the rent that is substantially lower than the market rent. This also can lead to the lease being categorized as finance lease. All right, that's it. Thank you. Thank you for watching.